The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 14th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I do want you to know I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, you can reach us at 727-445-1044. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down 15 points at 18,832. S&P off 4 at 2160. NASDAQ Composite off 23 points at 5214. Russell 2000 up 13. She's trading at 1295. Gold is flat. Silver's off 51 cents. Light sweet crude back 70 pennies. Leading the charge here to the upside, Harman International. I guess it is Merger Monday. They're up $22. Regeneron Pharmaceuticals up $18. Chipotle up 16. Lockheed Martin up 8. To the downside, Priceline off 44 points. Amazon down 20. Google's off 19, so the NDX 100 certainly struggling. Transdigm Group off $15. AutoZone not in the zone today. The red zone off $15 and change. So, okay, where do we begin? I guess we begin. I've seen a number of emails already in steve@tfnn.com, so feel free to reach me that way. Of course, I would just prefer to hear your lovely voice out there. But let's take a look at the questions right now. Hey, what are the markets doing? What's going on with gold and silver? And those have been the primary questions. And the GDX questions, you know, the common questions that are out there. So we'll take a look at those and really anything else that you'd like. Let's start with the markets. Now, both the Dow and the Russell 2000 have been the two indices that have been on a tear out here. So we really should check in on those to see what kind of clues, if any, we have out here. So we're going to start with the shorter term, right? Because if there's going to be any kind of a turn, a top, we want to go ahead and take a look at a shorter term, what's going on. And we step it up a notch. We can look at 10. We pretty much look at either 10, 30, 120, 300, and daily charts out there, just to really kind of keep it simple. So in the case of let's start with the Dow out here. If we take a look at its chart pattern, we're going to see that as it was making a high last night at midnight, 12:30, moving higher, doing less relative energy out there. The bearish reversal signal formed right here as we came in at the 1 o'clock time frame. Nice little dark cloud cover. Price then an hour later dipped below that oscillator unchanged line. That's the Stevie red line that you do pay attention to. And what we can see right now is price has pulled back. We're in wave number 5, forward to the downside, but it is running right into support. Here's what we know. This little red dashed line out here, this is what's referred to as a Tom DeMark support line zone out here, and price is really pulled back to that level. It's really like in how I would interpret in the case of TD, I would interpret that as pulling back to a breakout area. So thus far, the strong dog out there, the Dow, has pulled back to a breakout area. If that level fails, and that's what we're going to call that the price point of the low of the bar that came in just as really we were coming on the air out here. So the low there is 18,762. If you break below that, it would suggest to me that the Dow has lower to go. Now, I still believe over time the Dow does have lower to go on a pullback and retracement. We just may have the A to B leg. And maybe what's forming out here now is the B to C. Too early to call, but the 30-minute chart did give you a short-term topping signal. Now prices pulled back to what we'll call the level of support or a breakout area. If we look at a 2-hour chart out here, here's where we're going to notice coming off of that beautiful bottom, that election day morning bottom out here, we can see that, I don't make this stuff up. I couldn't make this stuff up. But we can see that as the 120-minute chart was moving into the 1:45, the 2 a.m. time frame, it was getting to, yeah, you heard it, Stevie Wonder singing in the key of G, that seventh wave move to the upside. At the same time, price was moving higher, doing less relative energy, forms a bearish reversal signal, does so on the next candle session. And so, of course, we can take a look at its TAS market profile. 18,734 could be a level of support. But you did certainly get a topping pattern here, right? You've got it on the 30. You certainly have it on the 120. The 30 says, hey, it might be done. The 120 doesn't give us that type of a signal out here. 5-hour chart, is there anything going on the 5-hour energy drink chart? There isn't. Other than we are trading below Stevie's red line out here. So that we haven't seen that occur since the blast off from the low on last Wednesday morning. When was that? Around 1 o'clock in the morning or so. On the daily chart out here for the Dow, well, this has given us a signal that it certainly wants to pull back. The level, the price level, I'll say right now is between 18,373 and I don't know, probably 18.6, somewhere right around there. So the Dow has certainly given us the signals that a short-term top or a top may be in, a retracement may be in, which is good. That's going to give you the opportunity to come in and buy the market. On the ultra short term out here, if we take a look at the 10-minute chart, well, that happened to form both a seventh leg to the downside, singing in the key of G. That says there is a short-term bottom now that is in on the 10-minute chart. And, where's price going to bounce to? Inside the Dow futures, 18,816 is absolutely game on. Could it move beyond that? Yeah, it can. Where could it move beyond that? Well, if it can clear 18,816, I got to be careful because I don't have this number memorized just yet. 18,816, then 18,825, 18,824 to be exact out there. So that's what we would expect if that seventh wave move, if that stretch in the rubber band on the 10-minute chart truly is a shorter term bottom, then we should anticipate that we will see the Dow futures contract move up to about the 18,824 level. Different story if it actually gets above that, but that is just take a look at the strong indice, the different time frames, and we can see the signals that it has provided to you and I. Now, inside the Russell 2000, we can do the same kind of thing. I'd have to do it really quick out here, but if we take a look, and I can do things like that. If we take a look at the 30-minute chart out here inside of the Russell 2000, this is the 30-minute chart. I don't know that I see anything out here. No, I don't. So I don't see anything on the 30. Let's skip the 30-minute chart here for the Russell. I probably have to do more work on it. Let's take a look at the 2-hour chart here for the Russell. What do we have? Oh, there it is. So now the Russell 2000 was making that nice high earlier today. All it was doing was just simply waiting until it could get up to that seventh wave move. That was coming in at the I thought that should be at about, what does it say, 12 o'clock. In any event, we are in wave number 7. This wave is not going to end till 2 p.m. Maybe that's what it means. It won't end till 2 p.m. to get that kind of confirmation. But we are seeing short-term topping signals. That doesn't mean we can't see a counter-trend rally, which is very likely, maybe for the next hour or so. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So flattish market out here in the Dow right now. S&P's up a couple points. Composites down 14. And let's go. Oh, so what else is it that you should be watching today? And to support the a bit of a, I'm going to call it, we're looking at primarily at short-term charts right now, right? 10, 30-minute charts, 2-hour charts out here, suggesting that suggesting one, that there is a pullback that is underway. Two, on the intraday basis, suggesting that a little short-term bottom is in. We should see some type of counter-trend rally, maybe setting up that B to the C leg of an A to B equals CD to the downside. We don't know for sure, but I would anticipate if we gave you the number inside the Dow where it ought to trade up to. Inside the ES Mini, the price target should be about the 2161 level. That's really only a few points higher than where we're trading right now, but we'll have to watch that 2161 level, because if that fails, then you're looking at 2166-ish, maybe 2169. Now, can the market do that? It can. There is plenty of liquidity. Here's what the bulls are licking their chops on, and that is that earlier in the day, we've seen the VIX index. That's what we're taking a look at. Go up and test some levels of resistance. The level of resistance that we're paying attention to is really about 1539 to 1554. That test is done. It's over with. It has been rejected. As long as the VIX index, a cash indice, trades below that, it says there's a 95% chance that the market will actually be in the green at the close today. It doesn't tell us how green it will be, but any closes below those two numbers, 95% chance that you will see a positive. Now, when I say the market, I'm referring to the S&P 500 here, which is just off a couple of points. So it qualifies, even being up, 50 cents would qualify and meet that parameter. So if price gets above that, then there's a 95% chance that the market, or the S&P 500, I should say, will go ahead and finish in the red out here. So right now what we've got is a test and a rejection. So in essence, that really covers the markets. Of course, the one other level, the one other key here with regard to the markets actually being in a nice type of a move to the downside is going to come from none other than the NQ out here. Now, as the markets were moving lower earlier, 10-minute chart as an example, we were looking at inside the Dow, its pattern return of that seventh wave move, price moving lower, doing less relative energy. At the same time, simultaneously, that was occurring, you had the daily chart for the NQ tag and touch and reject a level of support. What level of support? It's TAS daily profile low. 4674 is the number. It actually got down to 4672 and change out there. So there's a test, there's a rejection, but that is the key number to be watching, 4674. If that gives way, then the rest of the market ought to take notice and then start its pullback out there. But at this stage of the game, it is simply found support out here, and that is on the NQ, the daily chart that we're looking at, 4674. So hopefully that gives you a good overview of what the markets are doing, what you should be looking for, depending on the time frame that you are trading, what you should be anticipating, to the upside as we take a look at this four-paneled chart out here, which shows the other equity futures contract, Russell 2000, bottom right, shows that it's trading right at its 1.272 expansion of its last significant set of swing points. That number 1298.75. We're trading right now at 1299 and change. Of course, I do have a 10-minute delay, so we might be trading somewhere slightly different than that. Inside the Dow, it has also made its 1.272. So all the work really to the upside right now should be done. So that there's some nice little retracement out here that will give you the opportunity to get in on the Santa Claus rally that began in earnest last week. Now, let's go take a look at, have a look for new emails out here. Let's just go ahead and cover, and I know that was maybe a bit long-winded, but I don't know how else to share with you what the markets are doing other than to be somewhat thorough. I could just tell you, and then you could just trust me, which should be fine, and you should trust me if I tell you that I've done the work and here's what's going on. But it's better for you to see it, and then for you to go ahead and make your own judgments about what you should or should not do, and certainly what you should pay attention to. Now, with regard to Goldilocks, trading down to 80 cents right now, the most important chart, and the questions that I'm getting are, has gold bottom out here? And the answer to that question is, well, let's go find out ourselves. Let's do really the exact same thing. I think you might say, geez, Steve, what you do is boring because you keep doing the same things, looking for the same patterns out there. It is fun as can be. I mean, this is excitement out here. We use those same patterns because they are so helpful in answering the questions that we have. Has something found a bottom? Has something found a top? And you want to make sure that you stay within your time frame charts. If we looked at the daily chart right now of gold, let's just do that. You and I would take a look at this, and we would say, no, it hasn't found a bottom. No bullish reversal signal. That ain't a hammer candle. No, I probably shouldn't say ain't, but it ain't a hammer candle out here. We don't have an A to B equals CD to the downside that completed. If we did, it would look like this on the December contract. I don't know what it will look like. Maybe it has completed. Let's go take a look at it. We use the high out here from July the 6th. We would use, you could use a couple of different ways to do it. So there's really two A to B equals CD patterns out here, right? You've got this one that's going to show a completion now of a 1 to 1.618. You've got the larger one that's out there. So if gold hasn't bottomed, here's the A to B equals CD pattern that becomes active, and that's the one that gives you a price projection down here in the 1197, 1158, 1109 area out here with regard to Goldilocks. But regardless, if we do take a look at the daily chart here, let's not harp over the A to B equals CD patterns out here. Let's just say that the cavalry has not arrived. Not on the daily chart. However, not so fast as the 3 out of the top four teams inside the college, would say, yeah, you're not kidding. Not so fast out there. They were falling like, I don't know, what do they fall like? You can't fall like a fly, not unless you get swatted. But they were certainly falling. Okay, let's get over to the not-so-fast chart out here and go take a look at the 30-minute chart. Yes, this is where we get the mundane stuff. Now, if we're looking for a turn inside of gold on a 30-minute basis, hello, someone's knocking at the door. Sounds like a bull to me. What do you mean, Steve? Well, I mean, well, if we take a look at our wave counts to the downside, just so happens that as the 30-minute chart at 10:30 was making a low, it was singing in the key of G. It was seventh wave move to the downside. Price was moving lower, doing a less relative energy, exactly what you like to see when some type of bottom is forming out here, or top, just the reverse. In this case here, the bulls actually showed up. Nice little bullish engulfing candle by 11:30. Price getting above Stevie's 30-minute oscillator unchanged line. Right now, price may be pulling back just to test that area being about 12.17 out here. So we'll see if 12.17 holds. If the low from this morning gets taken out, then this pattern was. Now you're looking at the top portion of my screen. The bottom portion of my screen, which, as you know, both you and I are looking at, happens to be the Japanese yen, because we believe that if gold is going to bottom, so too is going to be Japanese yen futures out here. And so we're paying attention to that. And oddly enough, if not oddly, price was moving lower, doing less relative energy at 11:30 this morning. And right now, price is trading above its oscillator unchanged line. The two are saying at a minimum, counter trend rally is in force inside of gold, inside of the yen. That should mean inside of bonds too. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Tom, you were asking about GDXJ, GDX. Do you think there's a bounce coming for the two of those? And so I just saw your email, by the way. And so the answer is, yeah, I think we already answered that, right, by taking a look at what was going on between these two fellas, or these two gals, those being the gold contract 30-minute basis and the Japanese yen. So we've got some synchronicity. Is that even a word out there? I think it is, and we certainly have it. These two are in sync. They went to the Arthur Murray School of Dancing out there, and they are doing the Texas two-step, which is a good thing. They both have found patterns that help us identify bottoms out here. The real question now, Tom, because you're asking where do you put your exit point, I would say it's below today's low, somewhere below today's low inside of the GDX. But what you want to do is you want to be watching what's going on with regard to gold, because that says you would also then see this morning's low get taken out. A retracement here, no big deal. A retracement that forms the next highest bottom and then takes out the previous high, small A to B equals CDs to the upside, then that says the answer to your question is your stop is still in the same place, but that you've got more of a bounce or maybe even a bottom that is in play out here. So that is what I would be looking at with regard to your short-term trades for the mining area. That's certainly, as long as they're going to tag along dollar directionally wise with regard to gold. Now, silver's a different story out here, right? So Danny's asking if we could take a look at silver. And all my focus here this afternoon with you has been on gold. Has it not? It has. So we should make it has it not. Just give me a moment here. That's a strategic pause for waiting for the symbol to pull up on this system. And there we go. So now we'll get to the December contract and see what patterns are out here for it. Well, I guess this is going to be no surprise to you, Danny, or anyone else out there, right? Prices moving lower, doing less relative energy. Here's the chart on silver. I don't know where we are. Let's go find out in a wave count. Did you folks see that? You would think that this was Magical Monday, as if Steve-O just performed some kind of a magic trick, which I guarantee you, did I say guarantee? I did not. So, Danny, what we know is that from its most recent high down to the low, as we just simply put that tool on it, it immediately counted that we are now in wave G, number 7 to the downside, price moving lower, doing less relative energy, forms a nice little bullish reversal signal, the cavalry that has arisen, and prices trading above that oscillator and change line out there. So, yeah, you've got the same message inside of silver. Remember, this is a 30-minute chart out here. It's the first place that you would see some type of bottoming signal. How would you go ahead and take this information and take that over to the daily? Well, aggressive traders would just simply go ahead, go in right now, full bore. No, not full bore. You would obviously use proper money management, which means position sizing, but that's what you would do. More conservative trader would wait for the A to B equals CD pattern on the 30-minute chart to complete. Now, of course, at that stage, you've got to be wondering yourself, hey, is that just a Gartley sell pattern out there? Maybe you're looking for a series of higher bottoms out here, and right now you just don't know if this is a little bit of a relief rally or not. But what you do have, at least, to quantify it as being something more than a relief rally is the mere fact that you actually have some nice bottoming patterns out there. Of course, if we go to a longer-term chart, let's do that here for you. That way we properly bisect and dissect. We would be, hey, how about this? So here's a 2-hour chart for gold, giving us that nice bottoming signal, double bottom test, 2 price relative strength divergent pattern. So the 120-minute chart for gold is saying, yeah, that's what qualifies if you're going to go ahead and try to form a bottom 5-hour energy drink chart out here. What was this doing? This was not doing much out here, so not giving you a lot of hope. Would give you a lot of hope if you get above the 1236 level. Silver daily, Danny, the daily charts are not giving us any signals that I have seen, any type of bullish reversal signal daily. You know, that's why I have spent the time I have on the intraday charts looking for those first signs out here. But on the daily chart, look, you're trading below weekly TAS market profile right now. You're trading below dailies. The daily charts themselves do not look that great. Now, the daily chart that does look pretty interesting out here, or at least it did 20 minutes ago, yeah, it still does, is in fact the 30-year Treasury. So this is kind of interesting, right? You and I, we have taken a look at the correlation between the Japanese yen futures, gold, silver, and the 30-year Treasury bond out here. And what we know is how those work in synergy with each other, typically, directionally speaking, that a signal in one can help us identify a signal in the other. So we don't have that same type of bottoming pattern or candle formation inside of the Japanese yen futures. But the bond market is not exactly a small thing out here. I don't know how this is going to close today. But at the completion point of basically a 1 to 1.618 A to B equals CD to the downside, as we speak right now, you do have that hammer candle. So, you know, you've got a nice signal as we speak right now, really confirming what we said, more so than confirming what we saw inside the 30-minute charts out there. So, you know, these are the signals that we know that are available, that are present, I should say, as of 1:36 in the afternoon, and I hope that that helps everyone out. So that takes care of everything I believe that has been asked of me. And but let's go take a look here. Let's go see if I can find anything else that might have come in by email out here. If not, we'll just go take a look at some individual equities, or if anybody wants to post something in the den that you'd like me to look at, please do so. If I missed something that you posted, please repost it for me, and that would make life easy. So let's go take a look at individual equities out here. Let's go take a look at Priceline, trading down 38 buckaroonies, 480,000 shares, coming back into an area where this had most recently broken out. So let's go kind of measure, not kind of, let's actually do it. So this thing had broken out to the upside with 1.5 million shares. Right now, all you've done is come back to test that breakout area with lighter volume. You've also tested the top of its weekly TAS market profile. Does Priceline have to move lower any further out here? No. Now, as long as it is able to trade above the 1485.20 level, it's pulled back into a breakout area with lighter volume, PCLN out here. If we take a look at the next equity moving to the downside, Amazon, AMZN, what is this thing doing out here? We've got to pull this back a little bit further. You've got the A to B equals CD to the downside. That has not completed out here. In the case of Amazon, the measurements on that, the measurements that I would, well, let's see. You've really got two of them out here, right? Here's the first one. Let's go ahead and get this one out. Here's the first one of that. But, you know, when it retraces 90%, guys, I don't consider that an A to B equals CD. I mean, technically you can. It's just too much of a retracement out here. So instead, let's go with the second one. Let's go with the conservative approach. It's not really that much further away from the non-conservative approach. But here is really the A to B equals CD pattern. You could say that is in place out here inside of Amazon. I would say that if I could actually get it to work, I suppose I just have to actually turn it on. So here is the A to B equals CD pattern inside Amazon that at this stage says 701.88, 677.44 is more likely where it is targeting itself in price. Big volume to the downside on the 10th, 12 million shares taking out that B point, which only had 5 million shares. Dow's up 15. That's no surprise to you. S&P is flat. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 14. We've got a request inside the Tiger's Den from Kaz, C-A-Z-H. I think that's how you pronounce it. Now, the definition, just in case you didn't know, the definition for Kaz, it's at least what shows up on my Urban Dictionary out there, is when something is so casual that it's too casual to use a word that is longer than one syllable. I'm thinking Kaz is a casual kind of cat out there, and he would like us to go take a look at oil, light sweet crude, or she. I don't know what Kaz is. But if we take a look at light sweet crude, I trade down to $43.12 out here. So as we take a look at the daily chart, what this tells us is not a lot. Actually, it does. It tells us that price wants to head lower. That is the reading on the daily chart. Why? No bullish reversal signal. Price is trading below a swing point. You're also trading into the swing point. Let's go ahead. Let's make this a yellow line. So we got a red line and a yellow line. And as long as light sweet crude trades above below 43.45, you do not have a rejection of a swing point. So that's what the daily chart is suggesting, that, hey, once you get down to test the 41.58. However, you and I, we cannot stop there. We can if we want, but we're not going to stop there because we're going to go take a look at that 30-minute chart out here. And so you've got the same things going on inside of the commodity/bond sector, some things that have kind of been attacked here as of late. But that attack has come not so much with a vengeance in energy, perhaps in price, but not so much with regard to energy. That's why you see the black diagonal lines on my screen moving from upper left to lower right, telling us that the rubber band was stretched. And in fact, in the case of light sweet crude, it was stretched so much that it formed a nice little bottom here at 12.30. So is this just a little bit of a relief rally? Yeah, perhaps. I don't know if you're looking what side of the trade you're looking at, but long or short, what you want to see or not see. If you're short, you don't want to see price close above 43.45. Then you'd have a rejection of a swing point, and you would know you have a nice little 30-minute price relative strength divergent pattern. If you're long, okay, then what you're looking for is this pattern to not give in. In fact, you'd like to see some type of bullish hammer candle. Might be tough to do today. In fact, pretty tough to do. In fact, nearly could do it, but it'd have to be so exact that you just want to now see a rejection of that swing point and get up to 43.45, where you certainly want to now start seeing light sweet crude making higher highs and lower lows out here. So short term, 30-minute chart, that certainly is a early entry signal into light sweet crude. You do not have that same kind of pattern or suggestion on the daily. But that is the same thing that we have seen with gold, with silver, now light sweet crude. Not the case with the 30-year Treasury out there, which certainly needs a relief. So that one is for our cool cat. Kaz out there, or we could call Kaz Kashmir, C-A-Z. That was the first thing that came to my mind was Kashmir, and I typed it in to see if there was anything there that maybe that was a reference to, and that was all I came up with inside the Urban Dictionary out there. Okay, and any other requests, folks, just go ahead and type them in. I don't see much in the way of emails out there. So let's continue looking at a couple of individual stocks. How about AutoZone? Not in the zone, down $16 today. Let's go see what this is trading into. And it's trading back into a most recent low from a few days ago, swing point that had volume of, let's go see if we can actually get the volume reading, 288,000 shares. Well, you're moving into it with 294,000 already, so that's not good. This thing broke out of these lows with 596 back on September the 12th. So, this is likely, ideally, I don't know if it'd even be ideally, because let's see, this swing point here, 400,000 shares was rejected with 288. Man, it's already tested the bottom. But it hasn't been able to really get off of that bottom out here. Let's pull this back a little further. Let's put this on a weekly chart, see what the weekly chart gives us, if anything, out here. And we're looking for AutoZone. And in essence, it really doesn't really provide us with a whole heck of a lot of info other than its TAS profiles. As long as it holds 727.09, things will be okay in River City. Let me just check on the old emails right here real quickly. Email. And we've got one asking, Steve, can you look at the daily chart again for the Japanese yen? Where's it headed to, basically, is the question. Let's look at the currency pair out here versus the futures contract. Let's switch this to the daily time frame. So it must have been a while ago when both you and I were taking. Let's go ahead and turn off the market profiles. That's just simply some clutter as we speak right now. So it must have been some time ago, you and I, whoever that you and I was, it could have been just simply you and I when we were taking a look at the Japanese yen and saying, hey, what is it doing? And you and I went ahead and drew in this rectangular consolidation pattern, which we can see now today has completed that move. So we see the consolidation. When I say completed, the 108.21-ish area, that's simply nothing more than a measured move of a consolidation pattern out here. So the move to the upside, weakening itself, in this case, as we take a look at this chart, saying it could be over. No bearish reversal signal. Again, we were just looking at the 30-minute chart, not 30-day, but 30-minute chart here, that was giving us those early indication warnings out here. So that is, I would say, with regard to price projections, basically, this is it. What happens if this level gets taken out and price moves higher? Then I would just resort back to the ABCD patterns out here. It looks like this. It could look like this, if I can write it in here for you. That gives you the 1.618 as the next move to the upside, and that would be the 110 area. Above that would be 112. That would be your 1 to 2 A to B equals CD to the upside. That is on the Japanese yen. Let's take a look at a couple more to the downside, see if there's anything here in the leaders dollar-wise to the downside that have really blown anything out. Transdigm Group, they were out with numbers. Looks like net income of $154 million, up 9% from $141 million. Apparently that is not good enough. Revenues-wise, revenues 875 versus 809, up 10%, up 8% out there, but still, that is not good enough for investors. Stock getting sort of hammered. Volume today about 1.5 million shares out here, tackling the swing point with 1.5. So looks to me like where Transdigm is headed to is its breakout. We'll make that one a red line out here, and that would say somewhere in the price range of about 236 to 227. If we go turn on our profiles, we could see we're trading below those. So Transdigm looks like it is going to continue to head lower back to an original breakout area. That I won't say original, but break to a previous breakout area, 227 to 236. If we look at some things to the upside, let's look at Chipotle CMG. This thing is moving right past a level of resistance, that level of resistance from a gap to the downside. So that says that level of resistance should become new support. That's at the price level of 403 and change, 403.79. Now, this thing had gapped down with 6.2 million shares. You're up with 1.1. Nonetheless, that is a nice move inside of Chipotle out there. And my other chart, CMG, let's go ahead and punch that in to the screen out here. See if I can find any pattern, which I cannot. I don't see the so-called bottoming pattern out here. Do we have? I really don't. I can't make one up. I can't. I don't. That doesn't mean that this is not going to move higher. Hey, real quickly, let's put on our profiles. Right into the weekly. So if, in fact, Chipotle can close about 417.66, this thing ought to move up to about the 439 level. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Question, can the Dow Jones Industrial Average be topping short term? And the answer is yes. In fact, I believe that it is. When I say topping now, I'm talking about a shorter term top. I'm not talking like the top. I'm talking like it made its move to the upside and now has work that it needs to do to the downside, as well as a couple of the other indices. And as certain levels get tested, which subscribers and I are anticipating, looking for, then we'll know whether that is just simply the bottom of the next move to the upside or not. Now, when we began the show, you and I took a look at these short-term charts. We looked at the 10-minute chart, 30-minute chart, 120, and so forth, and we really focused on the Dow. Right, we focused on the Dow and the Russell 2000, but more of our focus was on the Dow and the equity futures contracts. And what we showed was that short-term little counter-trend rally bottoming is pattern. And you said, hey, the Dow futures contract is going to trade to 18 and 8 and a quarter, right? And so the actual high, since we've been on the air, by the way, has been 18,825. I then recanted and said, well, 18,824. But the first words out of my mouth were 18,8 and a quarter out there, and that so far has been the high. That's going to be the number to watch. If price can take that level out, and I don't see any reason right now why it should, but if it does, then you've got further to go to the upside. Now, price is also running right into the other number to be watching right now is 18,817. That's Stevie's oscillator on change line. You can see how that red line, we've seen tests and rejection, test and rejection. Now this is another test and a rejection thus far. But if you do close above it, then you're looking at a price move 18,830 and then 18,880. But you've got to get above those, and those are proving to be significant levels of resistance. And then that would say, okay, market couldn't bust it up. Now it's going to go ahead and try and bust it to the downside. And then the final piece of the puzzle is going to be, where is that VIX index trading? And as long as it is trading down below the 1552, 1539 level, you don't have a lot of conviction in the move. Doesn't mean you can't get it overnight. It's just saying, as we speak today, not a whole lot of conviction. So what are you going to watch for a confirmation? It's pretty simple. This is where the final confirmation with regard to what the market wants to do, at least I believe it is the NQ, and it's going to be that price level, 46.74.15. You break below that, everything else will follow suit. We'll get in line because you've got the nice expansion levels inside the Russell 2000, the TF inside of the Dow equity futures contract. You'll just, okay, I thought I deleted that. You'll just simply have everything lining up that would suggest that the move higher. So the answer is yes. And that's really what I anticipate. But I don't know whether it's going to be kind of this gradual, slight pullback, sideways-ish type move out there. I'm not that clear on it. However, it's getting a little bit clearer today with price being able to not, on this last test out here, break above 18,824 and 2160.50 inside of the ES and inside of the Dow equity futures contract. So that is my take on it, Mr. Z out there. Thanks for the question. As far as the rest of the day, folks, pay attention to gold, pay attention to that low that had come in, pay attention to the yen futures out there, and they'll help to guide you as to what the next moves inside of the market are. So, as we do on Magnificent Monday, and today, Merger Monday, I believe, with Harman International out there, we've got our polar bear, our favorite polar bear, and that's David White. So he's coming up next, and you've got the Tom O'Brien Show from 3 to 5. Thanks so much for being here. Have a great day, and we'll look forward to seeing you on sometimes what's called Turnaround Tuesday. We'll just call it Terrific Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.